Did you know you can be assigned on a winning trade after the market closes? It's called pin risk, and here is how to avoid it. Many traders hold short options until the very last minute to capture that final penny of theta decay. It feels like free money, but you are actually walking into a mathematical minefield. The first danger is gamma risk. In the final hours of expiration, at-the-money options become hypersensitive. A tiny 50 cents move in the stock price can swing your options value by hundreds of percent instantly. This leads to pin risk. If the stock closes exactly at your strike price, the outcome is random. You enter the weekend not knowing if you own 100 shares of stock or zero, making hedging impossible. Here is what most courses don't tell you. The market closes at 4 p.m., but option holders have until 5:30 p.m. to exercise. The game doesn't end when the bell rings. If news breaks at 4:15 p.m., pushing the stock through your strike, your safe position flips to a loss. To protect your capital, follow these closing rules. Never hold through expiration for a few extra dollars. Close your short positions or roll them to the next month. The transaction fee is the cheapest insurance you will ever buy. Don't gamble on the final penny. Close your trades early.